Welcome to Planium Pro Finance Plan. A detailed financial plan is required to ensure that your business idea can cover the bills, generate a profit, and help you meet your financial objectives. To get started, it is necessary to determine some input values for your plan. Choose start date and respective currency that your business operates in. In case you predict your sales and direct costs to stay the same throughout each year, choose the basic model. But if you believe you need to allocate monthly sales percentage to each year, choose the advanced. These setup options are used throughout the finance module and can be changed at any time. Opening position represents the current state of your business in the form of inputs for the profit and loss and the balance sheet. Insert relevant numbers for sales, representing the total sales revenue for the current year period, direct costs for materials, labor and other direct expenses for the current year period. Next, you fill in the values for all the necessary overheads incurred in the current period. It is important to check if the last window's value of profit and loss is correct before continuing, as it calculates the amount using values entered above. Next, we move to the balance sheet statements values for the current period, which depicts the total assets, liabilities, and shareholders' equity of your company on a date chosen earlier. Assets are split into the current assets, which are typically what a company expects to convert into cash within a year's time, such as cash on hand, accounts receivables, and inventories. Non-current assets, which are long-term investments that a company does not expect to convert into cash in the short term, include plant and equipment, motor and transport vehicle, property, IT and computer, and other fixed assets. Next step is moving on to the values of current liabilities, which are typically those that are due within 1 year, which may include accounts payable and loans. In the non-current liabilities section, you enter the current value of debt, such as debentures, long-term loans, bonds payable in more than 12 months' time. In shareholders' equity, you insert the values of the current balance of invested equity capital. Retained earnings section includes the current accumulated earnings or losses. Enter as negative, including reserves and the number of issued shares, if any. The next section, Sales and Direct Costs, is all about forecasting your sales and direct costs. In sales, enter the forecast annual sales for each segment of your business. Performed with according to the best information available, phasing allows you to plan how sales amount is split across the months of the financial year. Make sure to fill in this section and check that your expected monthly sales breakdown is represented as a percentage of the annual revenue that equals 100%. The same applies to direct costs, which represents the expected variable costs as a percentage of the annual sales forecast. Overheads section forecasts the ongoing business expenses that are not directly attributed to creating a product or service, such as admin and HR, maintenance and utility, rent and lease, marketing, and R&D/others. It is important for budgeting purposes, but also for determining how much a company must charge for its products or services to make a profit. Now that your current financial position is set, you need to make future assumptions in your financial model and project how the business will perform. It is important to input accurate and reasonable assumptions for the business, as these business projections will drive the rest of the financial model. Firstly, you have assumptions regarding the borrowings in the next 4 years, such as new debt and repaid debt. Secondly, you include assumptions about the stock and inventory days, which include finished goods stock and raw material inventory, and WIP. Fill in the numbers in case your business receives any shareholder contribution or anticipates any dividend payout in the next 4 years. Be aware that the scale is interactive, so you can adjust the necessary amount by moving it to the right or left. Finally, you also have some other assumptions regarding the depreciation rate for all other major asset classes and accounts receivable days and accounts payable days. Remember that at any stage you can click to Preview Report to see how your financials look in the form of financial statements. Capital expenditure are funds used by a company to acquire or upgrade physical assets such as property, buildings, or equipment. In the acquisition section, enter all the anticipated capital asset acquisitions for the business plan period with a description, then select the type of asset class, number required, and allocate full purchase costs to appropriate month. Same applies for the assets that your business intends to dispose of for the business plan period. When all the 3 statements are ready, we can proceed with valuation part. Here, we estimate revenue and expense values for year 4 of the business plan, and these values will be used to calculate business valuations and capitalizations. Valuation/capitalization method uses multiples such as high and low EBIT, high and low EBITDA, and high and low NPAT times by PE ratio, which are easily adjusted by moving the scale. Moreover, now we can perform case sensitivity by modifying assumptions and creating various operating scenarios using the profit and loss statement, method A, or balance sheet, method B. Remember that in the upper case, estimate the best case scenario. This would involve an increase in sales, a decrease in direct costs, and a decrease in overhead costs. And in the lower case, estimate the worst case scenario. This would involve a decrease in sales, an increase in direct costs, and a decrease in overhead costs. Use a negative sign where necessary. In this exercise, we can see how the value of the company changes in different cases in order to better assess risk and plan ahead. If, for example, sales decline. The last but not the least is the benchmark, which represents the process of comparing your business metrics and the performance standards of your company to that of other firms within the same industry. Click Select Your Industry to choose the industry. This brings us to the end of Planium Pro's Finance Plan Tour. Remember that your financial model is a tool used to inform decision-making and arrive at projections so that you can translate your ideas into numbers. We wish you happy and stress-free planning.